Premium Investing Group. It is Jess here. Today, I want to go over patterns. We highlight 10 specific patterns in the Power Course. And in this video, I want to go over some basic patterns, how to identify them, and then how to use them within our investment strategy. So I'm going to share my screen here. All right. So let's go to the beginning. Now, a quick tip. This is TradingView. If you would like to practice patterns at home, what you can do to make it easier is if you go to your settings icon, that's the top right screen, the upper right screen, the little gear icon. You go to that icon under the Appearance tab, and you can change your background to the color black. What that's going to do is with the brighter candles and the darker background, it's going to help you identify with your eye patterns a lot easier. Okay, so that's just a little tip. So what are patterns? Historically, stocks have shown patterns within price action. So what does that mean? How the stock has gone up or down has created patterns. And these patterns can indicate where a stock could go, if it could rise or fall. So obviously patterns are not a for sure thing. If you see a pattern, it's not going to definitely rise or definitely fall. However, it can be a good indication. And how we can use patterns within our strategy is after we do our IDDA analysis and we use our technical indicators, patterns can give us more confidence within our overall investing strategy. Okay. So, as a rule, most patterns that face in an upwards direction can indicate that a stock could drop. So, if it's facing up, it could indicate the stock could go down. And in general, if a pattern is facing down, it could indicate that a stock could go up. So it's opposite. So this is a great first example here. This is an example of a double bottom. So a double bottom is facing down. And how a double bottom is formed is if the stock drops twice at around the same area of support. Now, it's important to note that this is not going to look perfect. Textbook double bottom looks like a perfect W and it's amazing. But in real life, stock charts are not like that. So you're not going to see this perfect where it bounces on the exact same level of support. It won't look like this perfect line and pattern, okay? So how this works is, as I said, it hits off of the same level of support. And how do we know if this pattern has been confirmed? So once it drops to this level of support, it'll hit a level of resistance and then drop again and drop back and go back up here. So if it passes this level of resistance or the highest point in the middle, then it is confirmed. So in this case, it did technically confirm with this candle above here. However, it dropped again. So this could be creating an area of consolidation. It could create a triple bottom. We don't know. And that's the thing. Patterns, as I said, are not a for sure thing, but it can give us an indication of, like I said, where the stock could go. And once it passes that, we call this the neckline. The area of resistance is called the neckline. Once it passes the neckline, that could be a confirmation that the stock could continue to rise, because this pattern is a bullish reversal pattern, meaning it can reverse to the bullish side or start going up. Okay, so the next pattern we're going to go over is the triangle pattern. So this is a fairly common pattern, and how this is formed is you're going to see lower highs and then higher lows to create this pattern of a triangle. So how can we use this in our investment strategy? This can be either bullish or bearish, depending on where the candles break out of that pattern. So in this case, the candles broke out of this pattern in an upwards trend, so a bullish reversal. And as we see here, it continued and confirmed. So we don't know exactly obviously how far this will go up, but once it breaks out in an upwards trend, then that could indicate the stock could keep trending further to the upside. So that is how we can use this in our investment strategy, the triangle pattern. Okay, so next we will look at the triple bottom. So the triple bottom is the same as the double bottom, except we're adding another bottom. So we see it's hitting the same level of support 3 times. And when does it confirm? It confirms when it passes the area of resistance. So we see here it has passed that level and confirmed. Okay, and this is technically a bullish reversal signal because it's dropping down, and it did confirm, and then it dropped again. So again, we don't know exactly what stocks are going to do, but these patterns can give a small indication of where it could possibly go. So next, I would like to go over consolidation, because consolidation is a pattern that you are going to see fairly often in stocks. So what is consolidation? Consolidation is an area where the stock continues to bounce off of the same level of support and resistance multiple times. Now, is this going to look perfect? No. It would be awesome if it just pinged off of the same levels and it was beautiful, but that's not the case. So it is going to bounce off of generally the same levels of support and resistance. And we see here, it dropped to this level of support and then kind of danced around this area here, hit this resistance, support, resistance, support, resistance. Now, how can we use this in our strategy? Once it breaks out of the area of consolidation, either to the downside or the upside, it could continue to go in that direction, or it's indicating that it could reverse and start a different trend, essentially. So once it breaks out of this area of consolidation, it dropped down out of consolidation, and it did continue dropping. But then we see here it kind of ranged here and then continued to the upside. But this did sort of start a trend reversal here. Okay. So the next pattern that I'm going to go over is the ascending channel. So a channel is similar to consolidation in that the stock is bouncing in between the same levels of support and resistance in the same area. So we see here it's bouncing off a level of resistance, support, resistance, support, resistance, support, bouncing, bouncing. Once it breaks out of that channel, that could indicate change in the trend. Okay, in this case, it dropped below the channel and it did continue dropping a little, and then reverse trend, it started consolidating sideways. Okay, so once it breaks out of that channel, it could indicate trend reversal. And in this case, it did, and this was upwards, ascending channel, and then it reversed to a sideways consolidation. Okay, so let's see what we have next here. Okay, this pattern is not as common, at least from what I've seen. This is a saucer top. So a saucer top is facing up. We have saucer tops and saucer bottoms. Saucer tops are an upwards pattern, which could be a bearish reversal because it could indicate the stock could drop. And in this case, it did. So what is a saucer top? It creates this saucer-like pattern the candles create sort of this round pattern. And if this is seen, the saucer top could indicate the stock could drop. And as I said, in this case, it did. So once it passes this level here, then it's confirmed, and it did continue dropping. So that is another pattern that we can use in our strategy. And another example of a double top, or I didn't get to double top yet. I don't think. So a double top is an upwards pattern, which is a bearish reversal signal, because that can indicate the stock could drop. So what is a double top? It is literally the reverse of a double bottom. So it's going to hit a level of resistance, bounce back, hit a level of resistance, bounce back. And once it drops past this level of support, then it's going to be confirmed. So as we see here, this neckline, the stock drops past the neckline, confirming the double top reversal signal. So that is another pattern that we can use. And let's go to this one here. I'm going to let you guys look at this and guess. You can say it to yourself here what this is. Let me just make it look nicer here. So this, if you have not guessed, is a triangle pattern. We have lower highs and higher lows, and it has broken above the triangle pattern and continued in that upwards direction. So it broke out in an upwards trend, and it continued trending higher. Okay, so that's just another example of a triangle pattern. And I think we just have one more. See here. So this is one more example of consolidation. I just thought this was pretty beautiful consolidation, very volatile. And it did drop past this level here, but just another example of consolidation. And as we see, once it broke out of that area of consolidation in an upwards trend, it continued trending upwards. Okay, so that's a couple examples of patterns. Let me know if this helped. I will go over more patterns in the near future, and that is how we can use these patterns to incorporate into our investment strategy. So thank you so much for joining. I hope you guys have an amazing day, and happy investing. Bye.